It's a beautiful morning, everybody. It's a good morning to you all. Welcome to yet another episode of Accounting and Business right here on Man FM Radio 93.7 FM. If you are joining us on social media platforms, we'll be able to allow you to give us your contribution, of course, through commenting. If you are watching us from the mainstream, we allow you to give you calls and the number that we're going to provide to you very soon. So I'm going to be joined by Stephanie very soon. As usual, Stephanie is having some problems, but I'm sure she's going to join me soon. So, guys, what we have now here is a fantastic topic. All right. So, we are discussing uh, a very, very pertinent topic, and this is to do with loans. Should banks be able to provide financial literacy to people before they can actually issue loans to them? All right. Then we're also going to look at the CDF distribution. What do you think should be the use of the CDF? All right. And I'm going to play for you a short video. How before we finish up, where we saw a fantastic man from is it Siavonga giving us what he thinks should be the use of CDF, and also we'll talk a bit about sports as a business. All right. So it's good to have you people this morning. Uh, all right, fantastic. So, Adams, good morning. It's good to see you. How is Chipata? Fantastic. Always nice to see you, Tsenga. It's always to see you. Good morning, Stephanie is here. We have Wix Muduwa. It's good to see you, Wix. How are you? All right. Good morning, everybody. Good morning, Wix Muduwa. Good morning, Tsenga, and everybody else. Stephanie is back. Stephanie, good morning. How are you?
Good morning, Mr. Lusambo. How are you?
I'm fantastic. Thank you. All right. So, Stephanie, we get into it. We are looking at business sport as a business, the use of CDF, but also want to get your views and other people's views and my views on whether banks should give people financial literacy before they can give them loans. All right. So, just to get underway, Stephanie, how has been your week?
Oh, my week has been perfect. It's been nice. I've spoken to different people. They've gotten me excited, and I'm here.
And you are here looking amazing as usual, Stephanie. I think we should introduce an award for the most good looking presenter. Man FM should do something about that. We should have an award, Stephanie. You are rocking the studios.
Actually, there is.
There's an award for that. Fantastic. Fantastic.
There is.
So I want to hear your views, Stephanie. Also, I'm going to share mine. Should banks start giving financial literacy to people before giving them loans? Should banks
When,
do that?
when I saw
What do
your
you?
topic, Mr. Lusambo, I was very excited simply
Yes.
because even I, as an individual, I have nieces. And when they come to me and they're looking for money, one of the things I want to get from them, irrespective of how old they are, is what do you want to do with the money? I want some
Yes.
sort of plan. Call it justification or whatever you can call it, but I want some justified reason to why
Yes.
somebody wants that amount. So I see no
Yes.
reason why banks should be comfortable giving money to people not knowing what they're actually going to. I want some justified reason. Not knowing what their plan is, and also not knowing if somebody has it's like giving money to someone and you don't know how they're going to use it, which
Yes.
is not a good thing at the end of the day. So what am I trying to say? Banks should give people ideas, ways on how to actually utilize that money just before they get it. Really, it will reduce the risk of how many default payments. Now, I'm just thinking outside the box. Here's a
Yes.
bank that gives me money, of course, because I just told them I'm working, I qualified for the money, and I have no idea. So, what will I do? I'm actually going to use it for anything. There's always the latest hair, there's always the latest shoes. So if they
Yes.
give me some knowledge on how I can use it, I think they reduce the risk, my risk of defaulting. Yeah, they
Yeah.
do, which I am in support of the idea that there should be that education. A few days ago, there was information that the people that have defaulted, in terms that are of the people that collect the CEEC loans, the other loans, the CDF loans, people have defaulted, and the worst is that they don't even know where they stay. So I was thinking to myself, after people presented those plans, really they still need knowledge, because it's as easy. Mr. Lusambo is an accountant, he's a business consultant. So, Mr. Lusambo, I'm making a business, make me a business plan. They will not even know whether it's mine or not. But if they give you the knowledge, I think they could actually save some more. So I'm in support of that idea.
Fantastic. That's fantastic, Stephanie. And you, our audience, feel free to give us your calls and your contribution. Should banks start giving out financial literacy to people before giving them loans? And I'm going to share my thoughts on this one, okay? My answer is yes, all right? Banks should make it mandatory. And this is also an appeal, of course, to the regulators. We know the Bank of Zambia runs the banks. We appeal to the authorities that be to make sure that banks provide a certain measure of financial literacy to people they give loans. And here's why I say this, Stephanie. A lot of people, even those that are educated, all right, have no idea what to do before they can get a loan. People apply for a 50,000 and they end up getting 38,000 and they are shocked. They wonder why. They said, "Not, I wanted a 50,000. I applied for 50,000. Now the bank has given me 38,000. Where's the 12,000 gone?" People don't get to be told all those information. But here's what I saw. This is why I'm talking about this in this way. We've seen how NAPSA has performed. NAPSA has so far given over 4 billion kwacha to the Zambian people through these 20% partial withdrawals. And almost every bank is talking about use your money well. Before you spend the money, come and get some financial literacy. Banks are now talking about these things. But why don't they do that before they give people loans? If you go to the bank, you have collateral or you have a job, a payslip, banks don't care what you're going to do with the money. They give you the money regardless, all right? So I did a little research, and I want to share my points with you, and you, our audience, please feel free to come and share yours. Why I strongly believe that, and I'm saying this with all strength, Stephanie, banks should take it upon themselves to start providing financial literacy for those that get loans from them. This will reduce misunderstanding amongst the citizens, but also, here's what I think. I have a few points here that I want to share with our viewers, and also you, Stefan, give me your views. Number one point is this here. What I think, Stefan. Number one, if banks, all right, started giving financial literacy before giving loans to people, here is one thing we're going to see for sure. Number one, you're going to see improved financial decision making. I want that to sink in. All right. You know, Stephanie, financial literacy equips us with the knowledge and the skills necessary to, of course, make informed decisions about borrowing, budgeting, saving, and managing our finances effectively. So financial literacy that does not mean you're not educated. No, it simply means you're being made aware, all right, of certain things we may have been overlooking. So if banks were providing financial education, all right, they can be able to help borrowers to understand the implications and responsibilities associated with taking on debt. Banks should be able to educate their clients. All right, this loan you are getting is a 2 million loan. Yes, you have collateral, but here are the implications if you don't pay us back. Here are the implications if you invest this loan into this particular business. Maybe they can even offer an additional service after the loan to help the person getting the loan. Know what? We can do risk for you. All right, they do a risk assessment for you at a small fee. And here's the other point, Stefan. If banks were providing financial literacy to people before they get their loans, they are going to have something called reduced default rates. Like you mentioned, Stefan, people default every single day on loans. Do you know why? Because of lack of financial literacy. And this is just a fact, Stefan. Lack of financial literacy is often linked to higher default rates on loans. People don't pay back loans usually, are those who have no idea of how to manage finances. They go to the bank, they get a loan, they go and pay rentals with a loan. They go to the bank, they go and buy a car to start driving around with a loan. Lack of financial literacy. Even the educated people, unfortunately, don't have financial literacy. They go to get loans only to go and buy cars. So when borrowers understand the terms, all right, for example, interest rate, repayment options, and potential risks involving taking out a loan, it can save us a lot of headaches. And I'm going to share my sheet with you just to give a clear picture of what a loan looks like for people to understand.
93.7. And of course, on the other side, I should say, we are joined by Mr. Lusambo, and we have been talking about ways actually in which, should banks actually provide financial literacy for people before giving them loans. And that's what we really want to find out today. Should they give them financial literacy? Do you think if they give people financial literacy before they give you a loan, imagine you're going to get a loan of 50,000 kwacha, and then they actually tell you, look, there's this idea, you can default, like if you do that, there is this opportunity, what, money should be used like this, what you do is that and that when you actually get a loan. Do you think you could actually have reduced the chances of defaulting? Do give us a call on 0771616290. So we are really on accounting and business, and because we are actually talking about business today, we are looking at the idea that it is a good thing that banks have been able to provide loans for a very long time to different people. And guess what? You actually have to apply for the amount you want. They will not come and tell you how much you should get. They actually, of course, in other cases, they do advise, right? They will advise you on how much you are able to get based on what you do, based on how much money you make. But what if after giving you that money, or before giving you that money, what if they had the chance to actually give you some literacy? And I'm going to be gating those calls on the number 0771616290. I'm just checking to see if I do have messages on the other side. The number is 0771616290. And we continue to talk about financial literacy, but we're looking at banks. It's actually giving you knowledge on how to make smart decisions with money. And what if the banks could give you that smart knowledge? It includes preparing a budget. It includes knowing how much to save, deciding favorable loan terms, understanding the impact of credit, distinguishing it from different things that you need to do. Talk about assets, what assets you should actually get into. Oh, there's an opportunity. So did you know about it? That's you getting knowledge from the bank. After that, don't you think you would actually have all the ideas, and it would be very easy for you to actually get on with that loan? Also, like we said with Mr. Lusambo earlier, as he was actually on the other side, giving us some insight. I know he's going to be back pretty much soon. I'm sure it should be something to do with network on the other side. But what if you got that knowledge? Now you have the ability to understand that you could save money. And the bank itself could even give you that alternative of saying, now that you've gotten a loan, save using this account. Now there's this account where you can save, and you will save this much, and we will give you this much. Don't you think it would be a good thing? Do call us on the number 0771616290. If you've gone to get a loan before and you've defaulted, what were some of the reasons why you defaulted? Of course, today we are looking at financial literacy as one of the key elements for one that is actually going to go and get a loan, especially from that banking institution, from that financial institution. Of course, I know that no bank wants you to default, right? Because it's a business. But guess what? Whether you are defaulted or not, at the end of the day, they still make business, because when you default, there's actually interest they begin to add up. So for them, it's a win-win situation, really. Yeah, it is a win-win situation. It is, because then they will make money of you only if you fail to pay. And of course, they will never allow you to fail to pay. They will use every alternative possible to make sure that you've actually paid the money, and that too in full. But one thing they would do also is that they will begin to add interest. Ever gotten a loan of 8,000 and you're paying back at 12,000? Ever wondered how that is? Let's say your interest was only 10% and you were supposed to pay little money and then you defaulted. But what we are saying is financial literacy is key. Right before you have gotten that loan, you get that knowledge. And then, you have full information even as you are using. We do acknowledge the fact that away from getting a loan, people have trouble. I know you could have gotten a loan because you wanted to do business. Many other people that have gotten loans and they ended up not doing what they wanted to do. They ended up not doing what it was expected for, because they didn't have the knowledge. And sometimes a mere plan does not work. I don't know what your experience has been. Really do call us on the number 077 1616 290. 077 1616 290. Financial literacy is what we are talking about. To know how to manage your money, to know how to spend your money, to know how to borrow, to know what to save responsibly, to know where to use, to know which one is a good investment, to know about different investment ventures. It would be a good idea. And I think every bank should actually introduce that. Every well-meaning bank should actually begin to introduce financial literacy check. People have defaulted before in the past because they don't have the knowledge. But what if they had the knowledge, that wouldn't be the case? The what if actually just that lead to what if could answer the question today. 077 1616 290. Now, why is it important for you to actually get the knowledge before you actually get a loan? I said earlier that many people today, we've seen from many people that have been getting various financial empowerment schemes from the government. They actually have it written down by somebody who's not well trained on finances, has a very powerful proposal. They have a very nice business plan. They have a very nice business proposal. It looks amazing. It's polished. It's got all the details. It's got the banking details. It's got the know-hows. It's so convincing. But the opposite is true, because the person carrying it literally has no knowledge. And if you could actually spend 2 or 5 minutes with them to actually tell them to explain what some of the things mean in that document, many of them don't even know what that very document means. And it's because those are some of the requirements that have been put across. So they just want you to have this nice proposal, yet the knowledge you don't really have. But what if it was mandatory that everybody should have been given knowledge before they get a loan? Let's say 2 weeks. It takes some time for other people. It takes a week. It takes 3 days to actually get that exorbitant amount that you want. Let's say you're getting 100,000. As they are processing the loan, I think one of the things that they should get to process is your knowledge. They should be comfortable enough to know that the person that we are giving, prior to actually giving us that business plan, they have the knowledge. And only when they're comfortable to know that they've given you the knowledge, they've given you how to save, they've even given you a savings account to save with them, to reduce the risk of you defaulting, obviously. I think that would be a good thing. They've even given you that saving platform. I don't know what you think, Mr. Lusambo. Welcome back.
Fantastic. At what point did I even lose? I don't even know how I lost you. At what point did I lose? What was I saying?
So I was saying that financial literacy is really important because it gets you to understand safe saving schemes, how to invest, where to invest, when to invest. Yes, you have the money, but when are you ready to invest? Because certain times people are never even ready to invest, although they think they're ready. I'm never really convinced by somebody presenting that business plan. It could have been written by anyone, but even the bank giving you that saving account to say, okay, we've given you this loan, we've also given you this saving account. Put this much every time you make a lot of money, so that in the event where maybe my business shakes or it didn't work out, I would have saved with them for some time, which they will get their money. I will be saved. Every well-meaning bank should actually introduce that, Mr. Lusam.
Fantastic, Stephen. That's a good point. I just want to find out when I logged out, at what point, what point was I making? I didn't realize I was even kicked out of the studio. I've just seen that I'm not in the studio. What was I saying before I logged out?
I think before you logged out, you were actually going to give us an overview of how to go about it.
All right. So, guys in the comment, please give me a comment.
You had the
What
first
point was
point.
I
Yeah,
making?
it was the first point. You
I
actually
was at the
given us
first
the first
point.
point. Yes.
All right. So, guys, I have a few points. Let me just share my second point. So, the first point I made, somebody give me a comment. What was my last thought before I was logged out? Please, that would be very helpful so that I don't repeat the same things I said. I did not notice I was even logged out. I was talking the whole time in the background. I didn't even know.
Wow.
Can you believe that? Somebody give me a comment, please. So, like I said earlier, I said if banks were to provide financial literacy, Stephanie, all right, to their customers before giving them loans, it is going to improve the financial decision making in the communities, because financial literacy in general equips us, the individuals, with the knowledge and the skills to make informed decisions about borrowing, budgeting, saving, and managing our finances effectively. So, if banks can start providing financial education, banks can help borrowers understand the implications and the responsibilities associated with taking on debt. Lots of people don't know their rights and their obligations when it comes to debt. That's the problem that we have,
Mm,
Stephanie. And the other reason is this: if the banks can come on board, all right, and provide financial literacy to customers before giving them debt, it is going to help
mm,
them because they are going to see reduced default rates. And that's the fact. Lack of financial
yeah.
literacy has often been linked to higher default rates on loans. That's the fact. People don't have good financial literacy and management. They tend to misuse money. They go to the bank, they get the loan, they go and buy a vehicle. That vehicle gets damaged, they can't pay back the money, or they go and start a business that died before they started. They can't pay back the money. So lack of financial literacy has been one of the major causes of what increased default rates on these loans. All right. So when borrowers understand the terms, for example, interest rates, repayment options, all right, and potential risks involved in taking out a loan, they are more likely to make responsible borrowing decisions. That's what we are saying, Stephanie. If most people don't even know what an interest rate is, they don't even know the payment options in an event that you are stressed, because sometimes you find you're a civil servant or just somebody in private employment, you get a loan and suddenly you have unforeseen circumstances. Things are hard. Life is hard. All right. You are struggling. What options are available for you? All right. People are not educated. Most people don't even know that there's an option where you can go back to your bank and ask your bank, say, my bank, I'm dying. All right. Things are bad. I know I owe you so much. You are deducting me so much. Please, can we restructure? All right, because I'm unable to feed my family, I'm unable to pay my rentals, things are bad. Are we able to restructure? What options are there for me so that you can help me to pay you back without having to default? There's that option, and people don't know that. So people are going to contract more debt in the compound because they owe the bank and they don't think they can go and talk to the bank manager about how they can be helped. So what they do, they go and get loan from a Shylock. A Shylock now is going to charge them 50% interest. That is sad. That is theft, stealing from people in broad daylight. That's what we are seeing every single day. So if banks can come on board and educate their clients before they give them loans, they are going to reduce a lot of stress of chasing people to pay back the money, because financial literacy programs can help borrowers develop the necessary skills to manage their loans and, of course, increase the chance of repayment. That's what it's gonna do. So the other issue I think on this issue, Stephanie, is that if banks can come on board, all right, and provide financial literacy to their clients, it is going to also improve consumer protection, partly because financial literacy programs can empower individuals to navigate the complexities of the financial system and protect themselves from predator lending practices. All right. So by promoting and understanding of loan terms, interest rates, fees, and penalties, banks can ensure, all right, banks can ensure that borrowers are aware of their rights and responsibilities. This is going to lead to a more transparent lending process. In this country, Stefan, today, there's somebody who's going to get a loan and is going to pay back 50% month end. Today, right? Why are we seeing people go to Shylock? Shylock are becoming richer and richer every single day in the compound because people go to Shylocks. You get a 10,000 kwacha today, you pay back 15,000 kwacha month end, 50% interest on the loan. If people can be sensitized on the legitimate lending practices, even these Shylocks, all right, the Shylocks, they are going to desist from exorbiting people, from stealing money from people in broad daylight. The Shylocks have so much power because our people are not taught the best practices when it comes to lending system. People just go to anybody from the neighbor, lend me 10,000 kwacha. Okay, give me a month end, 50% interest. Who does that? You get a 50,000 kwacha today, you pay back 75 after 30 days. 50% interest is too much, and the authorities are watching. All right. Do you know why? Because the Zambian community has not been fully sensitized when it comes to financial literacy. Even the educated people have no idea what are the costs associated to getting a loan. Most of them are shocked. 5 years down the line, they're still paying a loan. 7 years down the line, they're still paying a loan. I have people that who even come, you know what? I got a loan in 2015. Up to today, I'm still paying for the loan. Why should you pay for a loan for 9 years? Why? So the banks can even just one day wake up, they send you a text message, all right, we are going to extend your loan by so and so and so, period. And you have nothing you can do about it. You don't even understand why they're extending your loan. So financial literacy is going to help have a better understanding, all right, and also build long-term customer relationships. Because, Stefan, look at it this way. By providing financial literacy resources, banks can foster long-term relationships with their customers. And also by helping borrowers make sound financial decisions, banks can position themselves as trusted advisors, thereby increasing customer loyalty and satisfaction. If you go to the bank to get a loan, the bank asks you, "Hey, Stephanie, why do you want to get 100,000?" So what? No, I have this charcoal business I want to invest in. I think it's lucrative. They say, "Okay, fine. Can you look at the numbers so that we can help you?" Maybe at a small fee, they look at your business idea, they assess the business for you, and then they make some projections for you. They help you understand that, you know what, this business in year one, you're going to make so much. In year two, you are likely to make so much. And maybe because of this and the inflation what is going currently, you may suffer some losses. Banks can build the trust because now people are going to trust banks. You know what? Banks have the best interest at heart for me. But what do we see? Banks don't care. As long as you're a civil servant, you have a pay slip. Baby, come anytime, we give you the loan. Anytime you wake up, if you're a civil servant, they are going to hug you, even give you a cup of tea while they process a loan. That is going to enslave you for the next 7 years. 7 years of your life in debt. It's not a good thing. So people are dying every single day. We have young people having BP, sugar is on top of the roof. Why? Because of too much financial stress in the communities. People are not made aware. Somebody goes to the bank, Stefan, and I see this often. Somebody goes to the bank, he has a 50,000 kwacha problem. He goes to the bank, applies for a 50,000, and is given 38,000. And this guy is shocked. He said, "No, I applied for 50,000, but they'll give me 38,000. But when paying back, you're going to pay the 50,000 plus interest. Where did the 12,000 go?" Nobody knows. Do you know why? Because nobody is interested in educating the public. Okay, how much do you want? I want a 50. Okay, what is your problem? No, my problem is a 50,000. Somebody from the bank should tell a client, "Okay, fine, since you want a 50 and your problem is a 50,000 kwacha problem, maybe apply for a 65 so that if we remove insurance and other costs, it is going to come to 60 to avoid you going back to the compound to go and start borrowing more money from your neighbors." But nobody does that. Or they say, how much do you want? I want 100. Okay, give us your latest 3 months pay slip. You give them your pay slip. Within days, your loan is ready. Come and you get your money and you go your way. They begin to deduct from your pay slip. They don't care about you. They don't care. That's not right. So if banks can come on board and take financial literacy seriously, we are going to see improved economic stability. We have seen in this country, the vice president was on CNN last week, and she said things are bad. The Zambian economy remains a mystery because we are depending on those creditors to come and pull us out of this dilemma. All right. So, how can we develop as a citizenry and as a country? Is if all of us come on board. People like ourselves who are fostering financial literacy on our Facebook pages and social media platforms, if we can work together with these banks at a grassroots level and provide financial literacy to people, here's the thing that people should understand, Stefan. A financially literate population contributes to overall economic stability. If you have people in a country who are financially literate, it is going to improve economic stability of the nation because people are going to be more informed about their finances, the borrowing allowed interest rates, and this is Shylock who seems to have so much power on people. People are like held to the throat by Shylocks in the compounds. A Shylock is feared in the compound. Do you know why? Because you borrow 10,000 kwacha, you're supposed to pay 50% interest. Now, somebody has problems already, and then you overcharge them the interest. What is the meaning of that? So if people can be educated, you know what? The courts in Zambia and the Zambian law, it provides for this interest rate and to be paid in this way. It is going to reduce the power from both the Shylocks and these microfinance, which are just mushrooming everywhere. All right. Everywhere you go, you see these microfinance companies coming, giving out loans to people. People are highly indebted in this country. This is why a simple increase in the price of minimum causes so much noise in the country because people are stressed. So if banks come on board, it's going to be easier, but because when individuals have a better understanding of personal finance, they are more likely to make informed decisions about spending money, saving money, investing money. And this can lead to increased financial security for individuals, reduced reliance on credit, and a more resilient economy. That's what we need, Stephanie. Now, let me just say this. And this is the hypocrisy that I've seen. And I want somebody to put in the comment. Guys, if banks, all right, lived by their advice, all the banks in this country would be broke. Do you know why? Banks tell you this. They say, save your money. Every time you get paid, they say, open a savings account, save your money. But do banks save their money? No, they don't. The moment you leave your money in the bank, the first thing banks do is to lend that money out to someone else. Do you know why? Because they understand something. They know that saving money is a high risk because of inflation, the loss of money with the passage of time. So how do they add value to the money? They go and buy bonds. They go and give out loans to people who are desperate. Then they make more money and give you a tiny percentage from your hard-earned money as interest on your savings. All right? That's not right. That's not right. You save the 500,000 kwacha, you get 4% interest or 6% interest, even 10% interest. The banks get your 500,000 kwacha, put in a bond or give out a loan to somebody at 29% or 28.5%. They make 5 times more than you, the owner of the money. That's not right. This is why even the president last week he said in his press conference, he said, banks have made extremely higher profits. It's not right. They should be engaged to see a better way of giving out loans to people. So the cost of borrowing can become down. The cost of borrowing in this country is very high. Banks in Zambia, Stephanie, make more money than banks in the US. Do you know why? Because we're a community that's not financially literate. So anybody can come on board and exploit us. So if we can work together with the banks, financial institutions, all right, and educate the masses about the importance of understanding interest rates, the risk of default, understanding viable businesses, bad business ventures, making forecasts for people, that can improve financial decision making in the country. And that's what we need to be able to focus. And I want to hear views from you, our listeners. What do you think? Give us your calls and your contributions. Should banks start providing financial literacy education to their clients before giving them out loans. Or even at the very least, just ask, what do you want to use the money? Is there a consultant who can help you analyze your investment, even at a fee? All right? Because today, Stefan, go to the bank, Stephanie. Go to the bank. You are going to simply apply for a loan today. Within 5 days, they are going to give you a loan. They have no idea what you're going to do with the money. Nobody cares. All right? And when you don't pay back the money, they wonder why. Because in the first place, they never took interest into knowing what are you going to do with the money? What do you want to put your money into? Can we help you assess the risks? Can we help you make some focus at a small fee? They don't do that. They leave you alone. You're a civil servant, okay? As long as you're a civil servant, you are secure enough. The government to keep on paying your salary, they'll keep deducting you. But they are sending you into poverty. So you become indebted to the bank, hiding that you always go back to a top-up loan. That's not right. You start work today, Stefan. The next 7 years of your life, you're just paying the bank. What is the meaning of that? What is the meaning of that? We have people who got loans in 2017, 2016, and today they are still paying. Now look at the amount. Somebody got a 60,000 in 2017. It's not yet done. What is the meaning of this? You get 60,000 and in 2017 it's not done. Today is 2023. 6 years later, 7 years later, you're still paying the bank. Why? Have you seen? We saw last month the Bank of Zambia through the MPC, they announced an increment in the policy rate from 9.25% to 9.5%. What does that mean for an average Zambian? What does that mean for that guy who's owing the bank? What does that mean for that teacher, that nurse who's owing the bank? That pharmacist who has no idea what this means? What does it mean to them? Can somebody sit their clients down and tell them, Mokfan, we have a new MPR. This is going to affect your current debt in this way. But here are the options. This is what you can do because we want to help you. You can either do this, you can either extend like they do send the text, you can either extend or you can deduct you more. But here's the beauty of extending and there's the beauty of not extending.
Can we pick this call?
Please. Yes, you can pick the call.
Hello.
Hello, good morning.
Hello, good morning. How are you?
Fine, thank you. And how are you?
Tell us your name and where you're calling us from.
My name is Gift, calling from Kaliklik.
Yes, Gift. Go ahead with your comment.
Yes. It is a great move that the bank should have less financial literacy because one, again, it will help us. And then secondly, you see, whenever you go to the bank and then you just say, I need a loan, definitely they will give you. Second, we do not know, let's say, percentage. They will just tell you we have this percentage, but they need to have, let's say, where they tell you that your percentage you'll be getting amount of money is this and this, not whereby you just find your money being cut also. So I think this is a great move. My question to Mr. Samba is it right to get a loan from the bank and then invest your money? Thank you.
All right, fantastic. Okay, so I think Mr. Gift has a point, Stephanie. It is true. Banks, like we have already mentioned, they don't seem to care so much. Okay, they don't seem to care so much about what's going to happen to their clients. Okay, if they get the money, all they care about is, are you going to be able to pay back the interest? Okay, but let me just give you a typical example. Maybe we can give them a number to call us on, Stephanie, so that people can start giving us a call. Give us your calls, people, and your contributions. I want to share a sheet, okay, of an example of what a loan will look like. Okay, if those of you who are intending on getting debt, let me share something of what your loan is going to look like, and then we can talk from here. Give us your calls and your contribution. The number is going to be provided. Stephanie, please, you can tell our people the number so that we may be able to.
We are asking the question as to whether banks should provide financial literacy before you actually get that loan. The number to call is 07716162290. 07716162290. What do you think the country would have looked like if many people got knowledge before they got the loan? Mr. Lusambo is sharing his screen, and if you want to see the screen, do follow us on Facebook, Money FM Zambia 93.7. Mr. Simon has a question or contribution. Hello.
Good morning, Stefan.
Morning, Mr. Simon.
Yeah, good morning, Mr. Lusambo.
Good morning, Mr. Simon.
Yeah, I think about financial illiteracy, if the bank can do that, it can be a good idea because it can benefit both the bank and their clients.
Yes.
Because currently, you can see that a lot of people, I would say even these cases of GBV, it is because of these loans and these financial problems. So if the bank can provide that, it can be a good thing for our country.
Indeed.
Yeah, thank you very much. You have a question?
Thank you so much, Mr. Gift. We appreciate it.
No, I'm just listening.
Thank you.
Yeah.
Number to call is 077
07716169290. If you've gotten a loan before and you've been wondering certain things, do call us on 07716169290. If you are planning to get a loan as well, do call us on this very number, as Mr. Lusambo was actually going to share a screen on the other side.
Yeah, so for example, here's a screen I'm sharing here. And I hope you can you see the numbers, Stephanie?
Yes, I can say there's security, there's 29%. That's is that 20,000? Something like that.
Okay,
But yeah.
so, okay, yes. So it's good you can see the numbers. So I'm just gonna do something like this here.
While we're waiting for the numbers, do you know that you could follow? Okay, all right.
Okay, good. So I'm gonna do something like this. I think there's a slight problem. Let me just stop sharing. Okay, great. Okay, definitely. So what we are saying here, Stefan, is this. What we are saying here is that if banks can simply come on board, all right, and simply say, you know what, let's help our people. For example, here's a simple example I want to share. It's a very simple example, but it's gonna help somebody who may be thinking about getting a loan, maybe. Okay, it's gonna help somebody. Let me just share my screen briefly here, just to see if somebody can see. If you want to call us, please give us a call on the number 077 1616290. We'll be happy to hear your contribution and what you think on this issue. So now, there you go, Stefan. For example, let's say you want to go to the bank, okay? Let's say you're a civil servant. You want to go to the bank and, you want to get a loan, all right? Say you want to get a loan, maybe you want to buy a house or a car, whatever it is that you want to do with a loan. So you go to the bank today. So I've simply used 29% because in Zambia today, I think that the interest is about around that 28.5%, for some 29%. So I'm just going to use 29% for argument's sake. So what we have here, let's say you want to get 100,000, okay? So we put 100,000 here today, okay? That means if you are getting this loan at 29%, that means your monthly rate is going to be 2.42%. You'll be paying 3,174.19 every month. All right. So if this loan is going to be for 5 years, 5 years is equal to 60 months. What's going to happen in 60 months? You're going to see we go to month number 60. So you can see there's a zero there to show you that the loan has finally been liquidated. And in 60 months' time, if you got 100,000 kwacha, see how much you're paying. You're paying 190,451.2. You're paying almost double the loan.
Wow. Yeah.
But see what happens. In the communities, people say, it's good if you get, I'm going to get money from the bank because I'm going to pay after 5 years. Guys, in the next 5 years, you're going to be highly indebted. Now, here's the issue.
We have a caller. Yes, please. Okay, you can go ahead. I think that has been cut off.
Okay, so one day the Bank of Zambia woke up. And then they will say we're increasing the MPC units from 9.25% to 9.5%. All right. Do you know what that means? It means that your loan amount is going to increase from 190 to somewhere maybe 200 or so. All right. So people should need to know what happens if you extend the loan. For example, now banks are saying you can either extend the loan or they can cut you more. So the question is, what happens to your debt if you extend? All right. So now let's say this same loan, you can see this same 100,000 kwacha loan. If you pay this loan in 1 year, for example, if you are paying this loan in 1 year, you'll be paying 10,699 per month. But see after 12 months how much money you're going to pay. Here in 12 months, you can see your loan is liquidated, but see how much you're paying. You're paying 116,391.1. So you're simply topping up 16,000 on top if you pay the loan in 12 months. So people should be made aware. What happens if I get the loan today and I pay it in 12 months? What happens if I pay it after 2 years? What happens if I pay it after 3 years? How is this affecting my interest rate? How is this affecting the cost of borrowing? Because what banks do, when they are charging interest, they charge you an interest rate that incorporates inflation. As money loses value, all right, the bank does not want to incur that loss of value. So they shift it to you. So what you're going to see on your payslip, you're going to see something, you're going to see these numbers, fixed amount every month, 969.6, all the way up to 12 months. But what is really happening to your principal? You can see your principal is increasing from 728 to 7458, 76 because of inflation. So this interest rate contains inflation inside. With the loss of money every month, every year, your debt is also happening in the opposite direction. So what happens if you want to pay back the loan? Say you got a 2 years loan and you want to pay back in 6 months. How do you pay back? Do you pay the whole lump sum, or do you pay something at a much more reduced interest rate? People don't know all those things, Stefan. So the same 100,000 kwacha you can borrow today. Someone pays only 116 in 12 months. Someone is going to pay 190. Someone who's going to pay this same loan in 2 years, see how much they're going to get in 2 years. In 2 years' time, in 24 months, see how much money you're going to pay. You're going to pay back 132. In 3 years' time, you're going to pay back 140 something. So people should be made aware which one is good for you. So how is your financial situation today? Are you in debt? Are you financially stressed? So somebody can be advised what loan is suitable for them, looking at their financial situation, but nobody does that. So we are saying banks, we challenge you. Involve us, all right? There are lots of financial literacy educators on social media, all right? But we challenge you, can you pick qualified financial literacy educator and work with them? The thing with banks, you're like going to pick people because they have a lot of following on social media and they're misleading the public. Pick people who understand numbers properly, all right? So we need to be able to see that banks will come on board and work with us to be able to educate the public on the importance of financial literacy. Not the way you do when you just go and support people that are known already because they will follow. No, can you now take it a deliberate action, make it a policy, all right, to really educate the public so that we can avoid this default rates, people dying of BP because they didn't pay back their loan. They never understood there's going to be a penalty on so and so. They never knew there's going to be insurance costs. They didn't know those things. They just got the loan, they're stuck. Somebody even goes and commits suicide because nobody taught them how to use the money or the risks involved, the penalties and stuff like that. So maybe we can do a few notes, a few comments, Stephanie. I don't know what's your view around that issue.
Well, I think we could actually read out 2 or 3 comments, as time does not seem to be our best ally. If you want to call, maybe one last call on the number 077-1616290. Is that Faton Ziambo saying financial literacy should start with asking the borrower the purpose of the loan? Banks must help borrowers to stick to their plans and encourage them to avoid diverting the borrowed funds. May I even think they should call them over time. How are you doing? How is business now? How did it go? Yeah, I think prior to that education, there should be somebody checking up on you on how business is doing. Wick says, I'm not in support of banks providing financial literacy because their job is to provide funds to their customers, not to tell them where to allocate their funds. And even if the banks were to provide financial literacy to their customers, they can still go for the liabilities because it's difficult to control one's mind. I actually agree again. Yeah,
All right. So
I don't know, Mr. Musa,
I,
what do you think?
I don't agree with this one part because, here's the issue. It says if banks begin to provide financial literacy, right, that's not their job. Their job is to give money to people. But it's going to help both the bank and the community. Right? If somebody, let's say your neighbor tells you, Stefan, that you know what, there's a charcoal business here, we're going to make money, let's get a loan. And then you go to the bank. You qualify to get a loan because you're a civil servant, you have a job, you have a salary. The bank asks you, Stephanie, so this 100,000 that you want, what do you want to do with it? So I want to go and invest in the charcoal business. They say, can we offer you some, can we make some projections for you at a smaller fee? Right, so they can make you understand what you're getting yourself into, and then they do some projections for you. They understand where you're going to sell. Then they give you some financial advice. So, okay, fine, I think this business is not very much viable because of funds, or maybe this business is like this, and the risks are like this. They help you, all right?
Yeah,
That will improve. That will make you go and do something that is going to help both you and the bank. Because if you succeed, the bank succeeds.
Yeah,
have you seen?
I think I support I support his last statement that says you can't control the mind. At the end of the day, after getting that information, it's up to the borrower to go and make that decision and do what they actually said they would do. But one thing, Wicks, is that at least the bank tried. If that person doesn't do what they said, at least one thing for sure is that they told them, and that's a very good thing. So that's the difference. Yeah.
That's the point, Stefan. We're not saying the bank should decide for you how to use the money or the bank should change your mind. No, that's not their job. What we are saying is for them to provide some. It's like you have a young sister or a young brother at home who is starting to date girls. All right, you tell them their diseases. Yeah, they think like they know a lot. Once they get sick, all right, are you going to say you want to change them? No, you did your best because you told them the dangers of what? Of fornicating. They know you told them. If they don't follow your advice, it's okay because you did your part. It would be worse for you to watch your young brother, youngster going astray and say, you know what, I can't change his mind. I can't change her mind. It's a life.
My mother's job.
No, it's my mother's job. That's wrong because your young brother, all right? Even if they mess up, at least they'll remember my brother told me this would be a bad idea. I just didn't listen. Than them saying, what, I had no one to advise me, that's why I messed up. We have people like that. I got married with no one to advise me. That's how come my marriage did not work. That's sad. All right. So providing literacy is not the same as deciding for you what to do with your money weeks. No, that's not the point. The point is to provide literacy. Whether you follow the advice or not, that's your problem.
Yeah. On that note, Mr. Lusambo, we would go on and on and on, but obviously time does not seem to be our best ally. So I guess we could wrap up unless you've got your final remarks.
Yes, so just to make it right, people, we are not roasting the bank because we love the bank. I love banks myself. Banks are fantastic people. But what we are saying is banks, can you work together? All right. Can we take financial literacy more seriously at a much more grassroots level? Not the camera, picture. No, not that one we see. We want the actual financial literacy. Where we go mukalingalinga, tuwakwata workshop mukalingalinga, we go kuda kune kumasa kuda kanyama mukati twaingira. That's what we're talking about. Not where you have a few rich kids come together at a conference, so Mungush conference center, then you say financial to discuss. No. There are people who don't even know what that Mungush is. We want to engage those people in the compounds and talk to them about finances so that they can understand. So we appreciate what the banks do, but we feel they can do more. All right. And if they can come to the fore, that would be fantastic.
Definitely. Thank you very much, Mr. Lusambo. Till next week, it's bye for now.